Okay, guys, we're looking at Bitcoin, which is rising aggressively in the markets, now going at around $22,000 a coin. And this time, what's happening in Bitcoin is that it's institutional money that's driving the rally this time, whereas before it was being driven by the retail side of the market. And the fundamentals is very similar to why gold has been going so high and getting so strong over the past 2 years, as well as interest rates in the United States and around the world have collapsed because central banks have to lower borrowing rates to help the economies through this pandemic. And this means that investors have to buy assets like gold, stocks, and now they're looking at cryptocurrencies for the first time as a hedge against inflation risks. So just remember, guys, if you have inflation running at 2% per year in your economy, which is the central bank's targets, usually investors would buy government bonds as a safe place to park your money. Because remember, when you borrow money to a government, you get paid back your principal plus some interest every single year. And the interest, as long as the interest paid back on the amount of money you borrowed to the US government or any other government, if the interest is higher than the rate of inflation, then the money that you've invested, the purchasing power of that money is protected from being devalued by inflation risks. Okay, so even if inflation was running at say 5% a year, as long as the interest on a government bond was paying you more than 5% interest, so paying you 6%, then the dollars that you've put into a government bond is increasing in value by 1% because inflation is only at 5% and you're getting paid 6% interest. So investors, as long as they can get interest above the level of inflation, the purchasing power of their paper money in circulation is protected in terms of that money that they've used to invest. But at the moment, obviously, interest rates are now at zero. But if you have interest rates at zero, and let's say inflation in a year's time is running at 1.5%, then that means you're not getting protected from buying government bonds. You can't buy government bonds to protect yourself from inflation risks because your dollars are losing now 1.5% of its value, for an example. If interest rates are at zero and inflation is at 1.5%, your dollars are losing 1.5% of this value. So what are investors going to do? They're obviously not going to buy government bonds because they're not receiving the interest they are hoping to receive to protect themselves against inflation. The central bank in the United States, the central banks in the United Kingdom, and across the world are saying interest rates will remain at zero until at least 2024. So we've got another 4 years of 0% paying bonds. So investors have to do something else to try to protect themselves against this inflation risk. And that's why gold's been so bullish, Bitcoin's been so bullish, and stocks are so bullish, because that's the only thing that investors can buy that could go up in value and protect themselves against the risk of inflation. So what we've seen is, if you go on Bloomberg, go on any website, have a look at what why are the investment banks, why are big hedge funds, why are these big players in the markets now look at cryptocurrency, is because they have to diversify away from bonds, which are no longer going to be the safe haven way of protecting your money from inflation, which historically has always been the case. But this time they can't, because central banks have to keep interest rates at zero to help their economies and help the governments borrow this huge fiscal stimulus spending that they're implementing at low rates of interest. So what we're going to have a look at here is the price of Bitcoin is highlighted in gold, the 10-year Treasury yield. And this, when I say yield, this basically just means the interest the government's paying on its 10-year bond is highlighted in blue once we adjust it for the rate of inflation. So let's say the government's paying 1.95% interest on its 10-year government bond in 2004, on the 4th of January 2015. Once you take away a 2% inflation, that would mean that your dollars are actually losing 0.05% of its purchasing power every year. So clearly you've seen here that when interest rates started to go lower in the United States, Bitcoin started to rise aggressively in 2019. So you can clearly see the correlation. When investors were no longer getting as much interest to protect themselves against inflation, investors are starting to buy Bitcoin as an alternative way to protect themselves against the value of inflation eroding the dollars that they are looking to invest in, usually bonds. Okay. And then once we saw the bond interest rate moving higher, we saw Bitcoin move lower. And as soon as the interest rate started to again slump to the downside, we've now seen Bitcoin take off and increase dramatically in price in 2020 since interest rates in the United States got slashed around March. You can see when interest rates in the United States in March got cut aggressively, that's when Bitcoin's rally took off. And this time it's not the retail traders buying Bitcoin, it's the institutional market buying Bitcoin. So that is a game changer because it's the big money players that are now pushing into the market. So let's say Bitcoin goes up in 2020 by 365%. Well, you've more than protected yourself against 2% inflation. If you take away 2% from that return, you're making a 362% return on your money when you're buying Bitcoin. So this is the fundamental reason behind Bitcoin getting so bullish. Investors cannot buy government bonds to protect themselves against inflation. They have to buy something else because the interest on that bond is no longer higher than 2% inflation because the interest rate is now at zero. And this is why the Bitcoin, gold are so aggressive in the markets in terms of price appreciation, because investors are buying stocks, they're buying Bitcoin, they're buying gold as an alternative to buying bonds, which would usually be the way to protect yourself against inflation. So moving forward, remember guys, we've got this $2 trillion of fiscal spending coming into the US economy next year. That should only push up Bitcoin's price even more. That's why people are saying that Bitcoin could go up to $50,000 a coin. Some even forecasting $300,000 a coin in the future, because governments are now pumping huge amounts of money into their economies. You got central banks increasing the monetary base with quantitative easing at huge, unprecedented amounts to try to help their economies recover from lower levels of growth. And then you have a structural bull market in these assets like gold, Bitcoin, and stocks. So I hope that makes sense, guys. It's really important for you to understand. Of course, you could take your technical analysis strategies to get into the markets, but as long as you know what's structurally moving this asset higher, then of course we can take advantage of this and try to buy the markets using a 1-month volatility stop loss and trying to get in to this trade long term and just understanding the fundamentals behind it. Until interest rates go up in the US, which is not expected in around 2024, and the rest of the world, expect Bitcoin to continuously be bought by investors as a way to hedge the risk of inflation from eroding the purchasing power of their dollars. So basically eroding their wealth. Okay, so hope that makes sense, guys. That's our analysis on Bitcoin. We want to be buying this right now because we structurally understand why it's going higher. Thank you for watching.